Hey, good evening, everyone, and thanks for attending the webinar tonight. The topic tonight is insulating wealth against rising inflation. I'm the first speaker. I'm Chern, the dealer from PhillipCapital. Together with me is Ying, a chartist, and he's going to host the second part of the webinar on technical analysis. So without further delay, we shall begin now. This is today's agenda. We will first talk about inflation and the implication towards the market. We will talk about how we can protect our portfolio by shifting investment between growth stocks to value stocks or gold-related assets. Third is the technical analysis part, and finally is the Q&A session. You can start to post your questions on the Q&A box, and we'll answer the questions during the end of the webinar. Because of the hotter than expected inflation data, US stocks declined sharply on 12th of May 2021 as triggered by massive selling, especially in technology shares, growth stock. The Dow Jones Industrial Average fell 2%, which is the worst day since January. The S&P 500 lost 2.1%, the biggest drop since February, while the tech-heavy Nasdaq Composite slides 5% during that week. In economy, inflation is a general rise in price level of an economy over a period of time. When the general price level rise, each unit of currency buys fewer goods and service. And inflation is a measure of the rate of rising price of goods and service in an economy. So what drives inflation? First is cost push inflation, which occurs when price increase due to the increase in production costs, such as raw materials and wages. One of the signs of possible cost push inflation can be seen in rising commodity price. Second is demand pull inflation can be caused by a strong consumer demand for a product or service. When fewer items are available, consumers are willing to pay more to obtain the item. Third is the housing market. So if homes are in demand because the economy is experiencing expansion, home price will rise. The demand also impacts ancillary products and service that support the housing industry, like construction materials, lumber, cement, steel. So all will see increase in demand. The last one is expansionary fiscal policy. Fiscal policy is the means by which a government adjusts its spending level and tax rates to monitor and influence a nation's economy. Expansionary fiscal policy by governments can increase the amount of spending, healthcare, infrastructure, education, etc., or cut tax. Expansionary monetary policy by a central bank can be lower interest rates or loosen monetary policy. So quantitative easing, QE for short, is a monetary policy strategy that used by central banks like the Federal Reserve. When the central bank decides to use QE, it makes large-scale purchase of financial assets like government and corporate bonds and even stocks. The biggest danger of quantitative easing is the risk of inflation. When a central bank prints money, the supply of dollars increase. This hypothetically can lead to a decrease in the buying power of the money that are already in a circulation, as the greater monetary supply enables people and business to raise their demands and for the same amount of resource, which drive up prices and potentially to an unstable degree. So this chart shows up to date, Federal Reserve has printed 7.79 trillion of US dollar since March 2020. So recent headlines on the news actually indicates rising inflation. We see surge in price in almost every aspects in life, like food, house, everything we use. At Berkshire Hathaway annual shareholder meeting in the 1st May, Warren Buffett alert about inflation. And besides other CEOs, other business leaders also express their concerns towards rising business costs. The annual inflation rate in US soared to 4.2% in April 2021, which is well above market forecast of 3.6%. The Consumer Price Index, CPI index, this index is a measure that examines the weighted average of prices of a basket of consumer goods and service, is at a highest level compared to a year ago. But at the same time, Federal Reserve projection that the inflation will remain at or below the central bank's 2% target through 2023. So the question is, are we going to experience a prolonged inflation, or it may be transitory? This is a relationship chart between inflation and stock market performance, taken from a Wall Street Journal article and research by Strategas research partners. So since 1950, in periods when inflation ran between 2% and 4%, the stocks trade at an average price to earning ratio of 17.4. But in the inflation range of 4% to 6%, and the average PE ratio of the stock dropped to 14.7. 1970s to early 80s, in US economy experienced a period of unhealthy rising inflation. So the historian actually called this period of time the Great Inflation. Stocks at these times are trading at a relatively low PE. So currently, S&P 500 PE ratio is about 29.9. Stocks are often broken down into subcategories of value and growth stock. Value stocks have strong current cash flows that will slow over time, while growth stocks have little or no cash flow today, but are expected to gradually increase over time. So when valuing stocks by estimate the value of an investment based on its expected future cash flow, in times of rising inflation, rising interest rates, growth stocks are negatively impacted far more than value stock. Since interest rates are usually increased to combat high inflation, in times of high inflation, growth stock will be more negatively impacted. This suggests a positive correlation between inflation and the return on value stocks, and a negative one for growth stock. The rule of 40 is a common metric used by private equity investors and strategic buyers to measure the performance of SaaS companies. SaaS, software as a service. So the rule of 40 states that at scale, a company's revenue growth rate plus the profitability margin should be equal to or greater than 40%. So SaaS management teams are often driving towards either rapid growth or increased profitability. And the rule of 40 has become a construct for framing the balance of these two phenomena. In this table, we indicate a few selection of stocks that meet this rule of 40. You may want to visit our website for further read up. We'll post the link in the chat box. So yes, please visit and read about the information. So Baba, yeah, is the Chinese tech company, and American Tower Corporation owns and operates a telco infrastructure in US. This Bilibili Chinese is a Chinese version of YouTube. They also involved in gaming industry. Some characteristic of growth stock are those companies that expect to grow sales and earnings at a faster rate than the market average. Growth stock often looks expensive, trading at high PE ratio, but such valuations could actually be cheap if the company continues to grow rapidly, which will drive the share price up. Since investors are paying a high price for growth stocks, so based on expectation, if those expectations aren't realized, growth stock can see dramatic declines. Growth stocks typically don't pay dividends. So since Fed says the inflation is transitory, so we may consider to rearrange our portfolio to growth stocks once inflation is over. To profit from inflation, investors might instead consider buying assets that have a strong reaction to inflation, rising when inflation rises and falling when inflation falls. Borrowing terms widely used, we can think of this as inflation beta. We regress asset class returns against changes in the level of inflation to calculate inflation beta. A beta of 1.5 would suggest that a 1% increase in the inflation would lead to a 1.5% increase in assets returns for a given period. The table show the inflation betas regress on monthly returns for a subset of assets. In addition, we also show real returns over the full period of analysis compared to a period of rising inflation. So over a period of 50 years, the annualized real return for S&P 500 is 7.9%. Okay. And while commodities and gold spot is 4.2% and 6.1%. But during the period of rising inflation, S&P 500 returns is negative 0.4%, while commodities and gold spots perform better than other asset class. So this is the reason why gold has always been considered a safer hedge against inflation. In fact, many people have looked to gold as an alternative currency, particularly for countries whose currency is losing value. Gold benefits from a diverse source of demand as an investment, reserve asset, jewelry, and technology component. It is highly liquid, lesser liability, carries no credit risk, and historically preserving its value over time. So we may invest in gold when we buy ETF of gold miners or physical gold. So we also post on our chat box this link. There's some market journal about gold, so you may have interest to go and have a look. There's a structural change in gold investment, which actually support the performance. First is the monetary policy. Persistently low interest rates reduce the opportunity cost of holding a gold. Second, central bank demand. A surge of interest in gold among central banks across the world, commonly used in foreign reserve for safety and diversification, has encouraged other investors to consider gold as a positive investment attributes. Next, emerging market growth, economic expansion, particularly in China and India, increase and diversify gold's consumer and investor base. Market access, a gold-backed ETF have facilitated access to the gold market and materially encourage interest in gold as a strategic investment, reduce the total cost of ownership, and increase efficiencies. Market risk. The global financial crisis prompt a renewed focus on risk management, and gold is viewed as uncorrelated and highly liquid asset to hedge market risk. This graph shows quarterly central bank net purchase and sales in tons for gold. So central banks continue to buy 95.5 tons of gold on a net basis during the first quarter of 2021, which is 20% higher quarter on quarter. So gold protects investors against high and extreme inflation. This graph shows historically return in periods of high inflation, outperforming broad-based commodities. Broad-based commodities is a broad basket. Portfolios can invest in a diversified basket of commodity goods, which includes like grains, minerals, metal, sugar, oils, coffee. So investment can be made directly in physical assets or commodity-linked derivative instruments. So in the years when inflation was high, higher than 3%, gold price increased 15% per year on average. Over a long term, gold has not just preserved capital, but also helped to grow. Research also shows that gold should do well in the period of deflation. Deflation is periods characterized by low interest rates, reduced consumption, and reduced investment. Investors can gain exposure to gold via exchange-traded funds, ETF, physical gold-backed ETF, or gold miners ETF, which invest in a basket of gold miners. So it is convenient and cost-efficient investment vehicles where investors do not need to incur a logistic or insurance costs from holding physical gold. Investors can easily buy and sell ETF on the exchange and take advantage of the strategic properties of gold as a unique asset class. Investor can gain exposure to gold price movements via gold mining shares. Gold mining shares are highly sensitive to the movement of gold price due to the underlying nature of the mining industry. For gold miners, their production costs fluctuates much less than the price of gold. Higher gold price often result in an increased profit margin for gold miners. As a result, an increase in gold price can have a large effects on gold miners' valuation. Conversely, a dip in gold price could result in a greater downside for the gold miners. Gold miners are susceptible to company-specific political, regulatory, and environmental risk factors. Additionally, new gold deposits are increasingly costly and difficult to locate. So these are the added risk factors that typically not found in gold bullion investment. In short, gold mining shares are reasonably correlated to gold price, but are much more volatile. Investors often use gold mining shares as tactical instruments to obtain leverage exposure to gold price in a bid to earn excess returns. The risk of investing in individual gold mining companies can be reduced with gold miners ETF. So these ETFs reduce the concentration risk by investing in a basket of gold mining companies. Newmont Corporation, formerly known as Newmont Gold Corp, is a mining company in US, operate in US and Australia. Barrick Gold Corp is a mining company that principally engage in the production and sales of gold and copper, as well as related activities like exploration and mine development. Goldfield Limited is a gold mining company in South Africa. Pan American Silver is a Canadian mining company. This is a one-year comparison chart showing price movement between S&P 500 index, the white color line, VanEck Vectors Junior Gold Miner ETF, the red color line, Spider Gold Share, the orange color one, and then VanEck Vectors Gold Miners ETF, the green color one. So the chart plot the relative price change against S&P 500 index. For further information about gold and Rule of 40, you may want to visit our website under education, under market journal for read-ups. So our colleagues in PhillipCapital do a lot of research and study to come up with all these materials and to conduct webinar, to shoot all the educational videos. So this is to educate our clients to improve the financial literacy. So it will be good if you have time to visit our website for more information and for more market updates. So with this, I will end my part and I will pass to our technical analysis part to Mr. Ying. And at the same time, please help us to complete this feedback form, okay, to help us to improve on our webinar. So thank you.
Right, good evening, everyone. I'm Ying. I'll be going through the technical analysis segment for this webinar. So before I start, right, you can just put in any companies or stocks that you might want me to draw, and also for a second opinion. Then later during the Q&A, I will go through on that. Okay, so before I dive into the charts, let me share with you on some promotions that Phillip is currently providing. Okay, this is a Cash Plus account. You can check in the link provided in the chat. Okay, so those that haven't opened this account, right, you can actually go ahead and do it lah. So next time when you need it, it will be there already. Okay, the link is shared. Yeah. So the next one, right, is complimentary live price codes. Okay, this is free lah. So if you have not subscribed to it, just go ahead and do it via the link that we are going to share as well. Okay, then Philip has been conducting many webinars and events. So go ahead and take a look on any topic that you might be interested on and register for it. Okay, then our Telegram group, we have daily highlights, daily news, and also all the promotions will be shared on the Telegram group. Okay, then the next one will be on WeChat group. The articles will be are in Chinese. So yeah, if you are interested, scan the QR code, then go and join our WeChat account, our WeChat group. Okay, so without further ado, I will start on the technical analysis. Okay, so for technical analysis, right, the short form will be TA lah. So I'll be using TA to represent technical analysis in this webinar. Okay, then disclaimer first, this is not a trade or signal call. It's only based on my own opinion and also for educational purposes only. Okay, so a brief on how my TA strategy is on the basis of supply and demand and also using price action. Okay, so many people has been asking me what is TA, how useful is TA, how can you use TA, you know, that kind of question. So I'll be sharing a very simple concept of supply and demand and how you can use it to assist you and for referencing of your entry point, your take profit and stop loss. Okay, so let me go into the poems. Okay, so the first chart, right, I'm going to share, right, will be Barrick Gold, in line with what Chern has shared earlier on inflation and how gold can be used as a hedge. Barrick Gold is basically a company that deals with gold. Okay, so this chart has been drawn up earlier on with. Sorry, I'll hang on. Okay, so for this Barrick Gold, right, the counter has been moving on an uptrend. The market structure is bullish. Can be identified by having a high, a low, higher high, higher low, and a higher high. Okay, so price currently is trading at $24.58. It's currently at a very tight range with a range of 25.27 to 24.58. Okay, so as long as the price is to be trading in this range, we can still be expecting more room of uptrend. Okay, unless it breaks down of this level at 24.58, then we might be expecting a demand to be coming in at 23.74. All right, so this is on Barrick Gold. The next chart I'll be sharing on is on Newmont. It's also a gold related company. So as you can see, price is also trading in a very tight range now. Okay, considering that the gold spot has been rising since March, right, at a low of 1,678 in March, and it has been bullish all the way until now. It hit a high of 1,910 during this week, and is currently trading at 1,895. So with that in mind, gold being a very relatable commodity for this company, right, we might still see more movement towards the upside, as long as this range of 73 and 74 is holding well. Okay. The next one we are looking at is Freeport. It's also a gold counter. It has been trading at a high at 46.1. Then after that, it's consolidating at this 40.74 range. it's a very narrow range. You have to really wait for a breakout of 41.95 before more up move will be seen lah, at least for this case. Okay, so gold counter, more or less, I will just be sharing on these three. The next few companies that I'll be sharing will be included like in the rule of 40. Okay, so the first one will be on Baba, Alibaba, ticker symbol Baba, BABA. Okay, so just now I shared, I'm going to show how does the simple concept of supply and demand helps you with your charting. Okay, so for Baba, we can see a very obvious downtrend, okay, in recent months. So it's identified with a high, a low, a lower high, and a lower low at of current price, current range. Okay, so what is important to understand is the first supply that came in at this range of 215.42, okay, subsequently it became a resistance level. So for Baba to see more room of uptrend, right, it actually has to break above this level before, before it will look nice in a way. Otherwise, it's been trading down towards this demand level at 204.13 level, which is well supported in May. Okay, so for Baba, still have to wait because it's going to range. Then yeah, the next level that you might want to see is at 229.50. Okay, so the next one under the rule of 40, there's another one, Shopify. Okay, so for Shopify, right, same thing. Let me just redraw the whole chart again. In recent weeks or months, days, they have been moving away from this resistance level form at 1,125, okay, at this candle, and it break above towards the 1,280 level. Okay, so before they came to this current range area, they broke through this another resistance that was formed at 1,221.73. Okay, as long as we can see price holding above this level, we might expect a high up move towards 1,322.21. Okay, so it's basically showing like as long as price going to hold at the key level at 1,221, we can see at 1,322. But of course, if the price is going to break down, right, then we have to wait back at 1,125 level where we might see a support being formed again. Otherwise, it's going to be trading in the very tight range until they break above. And once they break above 1,322, we might even see a higher high to 1,500 level, okay, which is above here. All right. Okay, so I'm done with the gold counters and rule of 40. For more of rule of 40 company, you can look into the link that we shared earlier. So for now, I will go through some of on the Q&A, like those companies that you might want me to take a look. Okay, we have someone asking for NEO. Okay, yeah, then I will go through NEO. Okay, yeah, so NEO was drawn, I think I did a chart back in 9th of May. It's included in one of our article that we shared for the April month. So as you can see, right, on 13 May, the price starts going down towards this demand area. Okay, this area where they form this back in October 2020, and price held at that level. Okay, then subsequently it continued the move towards at the current price at 37.76. Okay, as long as NEO can hold $35, right, which was the previous support turn resistance, and now as long as it can turn back into a support, right, price might you might eventually see the price going higher towards this level, which is 41.32. Okay, so that's on NEO. Then okay, we got Intel. Okay, let me talk about Intel. So, okay, Intel was also drawn for the April article on the popular traded counters. Okay, so it's the same thing. Price started trading downwards away from this support turn resistance indicated by this yellow box. Okay, so once they reach this demand, they show a rejection. So as long as then they show the rejection at 53.3. Then after that they traded outwards towards 55.65. As long as price can hold 55.65, right? Actually you might be able to see a range again, but unless they break back above 58, the structure itself is still quite bearish from how they came down in recent months. Okay, so this is on Intel. Okay, then I will look at MSI as well. Okay, MSI now we can see as it's at a high. Okay, the annual high, 52 weeks. Currently, it's at a very delicate price now because it's currently trying to form as a resistance. Unless they break above, right? Break above and form a support, right? Otherwise, it might just come back down to this previous resistance level before they go for more up move. Yeah, so this is just my take on Motorola. This level at 205, yeah, it's very delicate. Now they are trying to form a resistance at a price where it's not seen yet. Yeah, so a lot of waiting game. So I think yeah, just hang tight. Okay, so all right, okay, we have someone asking for Roblox. Okay, Roblox recently, these few days have been running madly. Yeah, before that it was a very nice range. Okay, for Roblox, right, let me go into page 4 lah, since the chart not it's not it's only started trading quite recently. Okay, Roblox Roblox previously the resistance was at 77.7 and the support was at 60.73. Yeah, so last week 22nd May, yeah, it started breaking out of this range, clearing the high that they made in April at 83.5, sorry, 83.42. So and recent days, okay, no, it's actually yesterday. Yeah, they tried to form a support at 87.14. Okay, then with the momentum coming in, bullish momentum coming in, right, and we are trading closer to a Friday tomorrow. As long as price can hold above the 87 level, you might be expecting to see more up move in the near future lah. But of course, because you don't have as much data, as much room to really look at these Roblox, then you need to be trading above 87 at least to be safe for your longs. Okay, then okay, someone asking for my view on gold spot against USD. Okay, gold spot, gold has been running 4 weeks high. Then it traded at 1,900 as I explained earlier. In terms of chart wise, right, as long as gold spot not any company gold spot as long as it can hold above 1,900, right, we might see more room of like uptrend for gold towards 1,955. Okay, that's just my opinion. But of course we have to see how the day is going to run out, because we still have non-farm payroll next week or next Friday, the US data release. Then also we have Biden's infrastructure. He's pushing up the plan, so it has to hold above 1,900. Otherwise, it's also in a very delicate situation. It has been running bullish for 7 weeks, 8 weeks. Yeah, so that's on gold spot itself. Okay, so okay, then I will just do one last one. A lot has been asking for Apple. Okay, I'm just going to do the last one. Okay, Apple, you also know stock split last year. That's why the chart not as nice. So I'm going to dive into even lower time frame. Let's see if you can see anything. Okay, so yeah, Apple also part of the April popular stocks that we drew up for the article. It went bearish on the 131 level and subsequently tried to go even lower towards 122.2. Okay, so at 123 they form a support and price started to try going higher lah, in a way. Okay, so unless Apple going to break above 127. Okay, let me clear the chart a bit. Yeah, so now the range, right, is they are settled in this range of 123 to 126.8. Okay, as long as price can continue to hold this 126, 127 level, right, we might see a move back towards like 131.26. Okay, so yeah, there's still room, but of course it's in a very delicate situation as well, because it's currently trading on a key level. Okay, so really have to wait for more momentum coming in and volume coming into it. Okay, then okay, so for TA side, more or less I'll be doing this. Yeah, so I will hand it back to Chen for the other Q&As, right, for on the fundamental side of it. So if you all still have any more like really like charts you really want to see, you can drop us an email or something. Right, does it work? Yeah, okay, so yeah, so if we have, so yeah, thank you for your time for this webinar. Then if there's any more things that you're more interested to look at, then give us your feedback, your like, yeah, you want to see more on TA, you can put in the feedback form, then we will see how we can work on that. Then also yeah, so I will hand it back to Chen. Thank you.
Okay. So we have this question, okay, from Mr. Lim. So he's asking why Fed says inflation will be transitory. So first, Fed measure inflation rates with personal consumption expenditure index, PCE index. So the Fed target for PCE index is at 2%. As long as the rate is stable or below 2%, so means inflation is well under control. The market worried of inflation is because of the increase of business costs and also the overheating economy. So the recent vaccination progress also encourage spending. So economy in US started to recover. And Fed in recent news expressed their confidence in keeping the inflation under control. So so that's the reason. I think that's the reason that why Fed says the inflation might be transitory. In conclusion, they are quite confident in controlling the inflation at the current situation. So in case the PCE index will exceed 2% or increase over the time, they will Fed will introduce some measurement like increase the interest rates or start to taper off the QE, the quantitative easing. But it is not going to happen drastically. That means they will gradually hint the market about the increase of interest rates, and they will also taper the QE in a slower phase to mitigate the impact on the market. So yeah, that's my answer. And okay, next we have this question: what is gold prospect going forward? Yeah, like what Ying mentioned just now. I think now gold spot is going at a bullish trend, a bullish momentum. The previous high of gold is around US dollar 2000 US dollar, which happened during August last year August of 2020. The bullish trend actually started since March 2020. So during that time, we know that COVID-19 outbreak, and people are looking for safer haven to protect their wealth. So actually, the time a lot of uncertainty in the market. So we are seeing a similar market sentiment now, that because of uncertainty of the market, uncertainty of the increased possibility of increased inflation. So people are started to look for a safe haven to protect their investment. So that's why we see gold spot goes up around 1,900 US dollar now, right? And in a bullish trend. But going forward, to be very frank, we are not very sure. Okay. So I think I almost should be cover the questions. Okay. So we have come to an end of our webinar. So thank you for your time in attending, and we hope that you have deeper understanding and insights into inflation and the US economy after this webinar. We will appreciate if you can give us your feedback via this feedback form. Okay, feedback on our webinar, on the topics, on the speaker, for us to improve our future webinar. And let us know what will be interested for you to see, okay, in the future, and we'll work on it. Okay, so with this, I would like to end this webinar. Thank you very much. Thank you, and good night, everyone.
Good night. Stay safe.